So I'll start with interest rates. I'll talk about rates in Uganda and maybe highlight what we're seeing in Kenya. In Uganda, we have a scenario where longer dated bonds above 10 years are taxed, withholding tax, final, at 10%. The short ones are taxed at 20%. So, in conversations with trustees, we try to make it clear that you might see a rate, but it implies something else simply because of the taxation. The second point I want to make on interest rates before we discuss the current levels is that we have noticed that around election times, the rates in Uganda tend to go up simply because of the uncertainty. And we had our last episode in 2021, all right? So right now we are a long way after elections. And in normal times, which I want to call normal times, our rates trade between, on the shorter end, about 10%, on the long end, about, you can go as between 14 and 16%, depending on the season. So last year in September, I think we reached a low point in interest rates. We went all the way down to 13, but as of to date, which is June, the rates have gone back up to the levels of 16. So within the range, but that is the range that we tend to trade within. Beyond then, there has to be something different, either an election or the currencies depreciating significantly and the like. So what we are thinking right now is that rates have gone up to, we had a 20-year issued at 17.75% about 2 weeks ago, which is quite high. We're also seeing in Kenya in particular where rates are going up. I think the CBK is trying to keep the long-term rates below 14%, but I don't know that they will manage to do that. But in the current economic environment, we are seeing an overall rise in interest rates. Maybe after the election in Kenya, maybe the temperatures might come down, we're not so sure, but the current situation is, you can actually take advantage of that rise in interest rates. It means revaluation, negative revaluation on your bonds, but now would be the time to take advantage of those rates.